Today, rocking the bullish party. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news. Well, all three US Wall Street benchmarks finished lower on Tuesday in a broad sell-off after the downgrading of several lenders by Moody's, and that reignited fears about the health of US banks and the economy. After a 5-month rally pushed the benchmark S&P 500 and Nasdaq Composite within 5% of their lifetime highs, August has now recorded 5 losing sessions out of 6. The S&P is down 2% this month and the Nasdaq down 3.2%. Tuesday's decline was triggered after the agency cut ratings on 10 small to mid-sized lenders by 1 notch and placed 6 banking giants, including Bank of New York Mellon, US Bancorp, Street and Truist Financial, on review for potential downgrades. And Moody's also warned that the sector's credit strength would likely be tested by funding risks and weaker profitability. Market confidence in US banks has been gradually returning after the failures of 3 lenders earlier this year, including Silicon Valley Bank, shocked the financial system. The S&P 500 Banks Index has slipped 2.5% year to date, compared with a 17.2% gain by the S&P 500, and the downgrades expose the fragility of investors' confidence towards the financial stocks. In fact, the Banks Index slid 1.1% on Tuesday, while the KBW Regional Banking Index dipped 1.4%, although it dipped further and then recovered a bit later in the day. And big banks like Goldman Sachs and Bank of America each eased around 1.9%, while the Bank of New York Mellon dropped 1.3% and Truist fell 0.6%. Jason Pride, Chief of Investment Strategy and Research at Glenmead, said that Moody's downgrades, as well as the notice given to larger banks about possibility of future action, were a public statement about the agency's concerns for the health of the banking system and how it affects the wider economy. I think it's a big deal in the bigger picture of how the economy operates, because regional banks lending is one of the main lubricants of the economy, he said. If it slows down, the engine just doesn't work as well. Reaction to the bank downgrades pushed up the volatility index by about a point, hitting a 2-month high. But as I've said several times, the VIX is now really a done deal in terms of trying to actually read what is really going on, because many people are using options that the VIX doesn't track. Anyway, the Dow Jones Industrial Average fell 0.45% to 35,314. The S&P 500 lost 0.42% to 4,499, and the Nasdaq dropped 0.79% to 13,884. And 8 of the 11 major S&P 500 sectors fell, and while financials was understandably one of the biggest decliners, materials and consumer discretionary also weighed heavily. The energy index did overcome an initial slump, though, caused by disappointing trade data from top consumer China, weighing on crude prices to trade 0.5% higher. It rebounded along with oil prices after a US government agency projected a rosier economic outlook. But I will, in a separate post, talk about the China syndrome, because I think this is now the next one to watch, as well, of course, as the question of the banking stocks in the US, which I think are still overvalued. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.